Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the daily market analysis where we are looking at what exactly happened during the day in the markets today and how we can plan for a better trade tomorrow. And this is analysis for November 9 to the Tuesday 2021 and what happened in the market today. Index is at a 20 moving average resistance, but it had made a V-shaped hammer bounce today. Let's see what exactly happened, how we can make a better trade plan based on all of this. What you see on the left side, we will look at the charts and do the pre-market analysis, and also we will have additional data analysis on open interest, volatility, institutional participation, sectorial watch, and global commodities, and also we'll have actionables. We'll take some stops also. Okay, so price patterns, let's begin with that. So this is a price pattern that you see here. It's a hammer. The hammer is bullish. The the shadow of the candle shows that the bulls are very much present. Right side Bank Nifty, this is a shadow of the wick. This is also a hammer, and that shows the presence of the. And the bounce had earlier happened from here, and it had slightly retraced, and it has confirmed today, and 18K was conquered. Right, but Bank Nifty did the hammer bounce, but did not perform as much. So 0.85% green close of 150 point up Nifty, good move is what happened today. And remember that in the morning it had dipped to 17,850, and after that only it had this big up move, conquering the 18K. So it went to 850 and to the support there and bounced back and conquered 8K. So that was very nice. Bank Nifty did not perform. It closed red with 135 points, and although it was a hammer bounce, hammer candle, it even slipped below the 39K rounding number, and then it breached the 20 moving average and the Fibonacci 22 retracement levels also. So this level, somewhere here is the Fibonacci 23 retracement. Right? You can see that here, right? So it's breached and to the support of the 18,950. So intraday, if you see, it's a V-shape. This is what happened on Nifty and intraday. Right? It bounced up in the morning above 18K, 1840 something, and then it big red candle, a big sell-off happened immediately, but it took the support at 17,850, 830 that happens, and then it was steady up move for the Nifty, and it was a V and beyond. But if you look at what happened, it was downtrend from the beginning. It was a downtrend, but it did a V and stopped there. It did not further move like Nifty, right? So it moved and stopped at the support region. So from there it had slipped down earlier. In this case, it had slipped down support region and then conquered it, and then further beyond that, and then broke out resistance. Okay? So this is exactly what happened. So Nifty had fallen off the Bollinger Bands already, right? And it could not close above it, right? Today also, if you look at the Bollinger Bands, that's what you see, right? So this is the Bollinger Bands 20 moving average, and if it did excellent bounce from here after dipping to 17,850 levels, it conquered 18K and then closed much above that, but it just could not close above the 20 moving average. Here also the hammer had slipped off the good support which it had taken for the last several days and could not close above it, which is what it shows. And also the Bollinger Bands also shows that the up move of the upper band is stopped. Up move has stopped. It has turned sideways on Nifty and Bank Nifty both. So it's sideways when the bands of the Bollinger moves, it confirms that there is going to be consolidation. But remember that there is no skews that has happened. The Bollinger Bands are not coming closer. It may come after some time, but right now it is far apart. So as long as these two bands are not coming, then the volatility will be high. In expanded state itself, there will be high volatility, will be big move and then big falls. So that is something that you're going to be cautious about. But consolidation is definitely what is in card. So that is what. So after that, we can now look at the support and the resistance levels. So for the next day, Nifty on the left side, you can see that the immediate resistance now would be 18,350 to 18,450, that level, which is the Fibonacci projection level first, and after that you have the all-time high of 18,650. So breaking of 18,450 will be the first challenge. ahead of the resistance, you can say, right, on the charts. And supports, 18,000 is a support because it has conquered that. Breach of that indicate that it is weak. So 17,850 also is a previous swing low now because it had taken a support there and then bounced up. So that is also a good support. That is broken, then definitely 17,650, which is the previous swing low here. This is also a Fibonacci 23 retracement for the Nifty. So they're all good supports. Below that you have 7450, 17250, then 7150, and then 70,000 nominal. All the supports are down there, but I don't think we're going there very soon. Right side Bank Nifty, you can see that the support zone is 39,300 to 39,500. 39,500 will be the support zone for the XYZ. And then if that is broken, then you have a big fall, which is the previous swing low, which is at 38,400 levels, right? If that is broken, you have 38,004, and then below that it's 37,800, right? So all previous resistance zones, right? This is the resistance zone, this is the previous swing low, and on the upside you have 41,000. First resistance would be to take out the 40k. 40,000 has been broken first, 40,000 to 40,200. That resistance zone has been taken out. That is from where it had broken out and made the big move earlier. Right? The unexpected big Bank Nifty move that happened in the previous weeks. Now that has to be taken out. 40k has to be conquered for any bullishness to appear on the Bank Nifty. And after that, you have a resistance upside of 41,000 and 42,000. This is actually right. So this is about resistance on the charts that's on the Nifty and the Bank Nifty. Bollinger Bands, we are already seeing the implications of that. Momentum, we already know that there is a bullish reverse divergence which can take us back to the previous all-time high. This is the price is going up and the momentum is coming down. It is already confirmed and it is in play. That's why the bounce has happened, but the target for that has long way up. So it's still in play. But otherwise on the short term, this weekly, right side I'm seeing is daily on the Nifty and on the Bank Nifty on the downside. So daily time frame, you can see that the momentum is not that great. It's in the sideways. It is resisting below the RSI 60. Here also the sideways resisting below the RSI 60. So momentum on the short term is not good, but momentum on the time frame weekly is good, and also we have a reverse divergence which is bullish on the Nifty weekly basis, medium term, right? Now trend ADX, if you see that, you can see that trend is lost in the short term to bearishness on both indices. You can see that DMI negative is what is dominating, and also you can see that the strength of the trend has been dipping, and Nifty also it has been dipping. But one thing that you have noticed, Bank Nifty weekly, right, and Nifty weekly both are bullish actually trend wise, unlike the daily. But on the Bank Nifty, the strength of the trend, this green one is rising up only on the Bank Nifty. So that means it is good trend still on Bank Nifty. On a medium term, Bank Nifty is more bullish than the Nifty, but short term, both are bearish zones right now. Short term in the sense daily candles. Now let's look at the volatility. You can see that the mean reverting nature of the range bound moves of the VIX is what you are seeing between 19 and 15. Today it shot up near to 4% up, right? And 16.3 is well. In fact, what is 15.5 and IVP is 34.55. It has not gone above the 40 till now. There's much to go up for the option selling to properly happen. Now, open interest analysis data is seen for the Nifty on the left side. You can see that huge put writing can be seen at the 7,900. Similarly, huge call writing can be seen at 40,000. So conquering 40,000 is a big chart for Nifty, and 17,900 is a good support. So this is where the highest open interest are seen. So Nifty put call ratio, likewise, it's showing the 0.99, which is almost in the bull zones. But Bank Nifty look at 0.64 because resistance is dominating the charts for open interest chart. If you see, now you can see that good supports are being built up on the Nifty, which is bullish. So Nifty looks more bullish than Nifty on the open interest data. Trend wise, Bank Nifty looks on the medium term. Right? So the different combinations that you have to understand depending on what kind of positions that you're taking. Is it intraday? Is it 2-3 days? Is it 2 weeks or 2 months? So depending on that, you have to interpret this. We are more interested on tomorrow's action or next few days of action. So the highest put rating is at 7900, that is where the highest support is. After that you have 7800, and the resistance unit is 18500, which is very far. So that means it can, after that you will find the 18200 also. So till 18200 the path is clear. Till there, that is much is sure. So it can move to this 18,200, and then what happens you don't know next 2 days before the expire. This is for the November 11th scenario. Bank Nifty 39,000 is where the highest support is. And after that you have 37,000, which is very wide. So 30,000, 39,000 may hold good, and resistance even 40,000, which is a big resistance. That has taken after that 40,000 also. Put call rating is there. 0.64 is put call ratio is bearishness, and we had a futures long build up on both indices. Let's also look at now the sectoral performance. You can see the IT closed 1.3% up, with IT means the IT sector, right? So IT sector is moving up, and then it is taking 20 moving average support also. But momentum is still like this, so we'll have to wait. Metal also 1.2% up today, but momentum is still short up. So wait. Auto is further moving up, but it is formed an indecisive dodgy kind of candle. So, but momentum has already regained last week itself, and time to pick up the stocks if we are sure that the momentum is kept intact. Pharma 0.5% down. Pharma is weak, but it is rebounded with a hammer today, and the momentum is short term is lost, and so we'll have to wait. FMCG closed green 1% up, but momentum is still not good on the short term yet. Realty bounced up 1.5% up, momentum was also regained, so time to pick up the stock. For reality and auto, two sectors bullish, others sideways, we'll have to wait. Although some good moment, green moments happened today. The institutional participation, this is kind of a worry. So look at FIS. Today also they sold, not too big, but 860 crores. So they have been continuously selling except for one day. From the entire month, only one day they did little buying, otherwise it was all selling. So 1,500 crores total selling, and they compensated for that. They did so the bounce happened because of the domestic institutional purchases that happened today, which is optimistic. But yeah, so foreign institutions participation, is they did heavy 25,000 crores nearly selling last month. Now they continue doing that, so foreign institutional participation is bad, which is a concern, but most institutions are compensating for them doing big purchases. Now dollar, look at the currency. Dollar index is dollar is weakened, and it is clearly facing a resistance to break out of both this upper resistance. But look at the currency pair USD INR. It has slipped heavily. The last 2 weeks it slipped from the top of 75, and now it is 74. Right. So big fall, and it is taking the support. Now the question is whether it will hold the support and hover around here. So it has fallen back to the channel from where it had broken out, and then a failed attempt happened earlier. So rupee strengthening is a positive thing, and also some cool off had happened the last 2 weeks on the crude, but still it is at 81 kind of levels, right? It had slipped, so we got the petrol cheaper. Now again it is bouncing back. It is not falling down at all. It is not even taking support here, which is a worrisome, but some cool off at least happened. Now the dollar is slightly weakened. Gold is breaking out. It is this clear candle showing that it is breaking out of it. But there are major resistance in that side. Gold is bullish dollar, especially when dollar is weak. Gold will break out. Now Dow Jones is showing up, and Nasdaq is showing flat, and S&P is flat, and UK markets are all flat. So no major moves are seen as of now. We have to check that in the next day for the global markets, how they are performed during the before the opening of our market. Right. So next month's stock picks is Canara Bank is having a rounding pattern weekly breakout. So go to the daily time frame, look for a retracement, and then why? Because huge volumes, big momentum breakout, big trend on all time frames. Second one is Brazil. It's all cement sector itself. All of them are breaking out. So Brazil is a good pick. It is having a very good trend line, up move, channel up move, and Volumes are great and momentum seems to be good. And go to the this is a weekly chart, but go to the daily for entry. So when you get a retracement at some time. So two picks. These are personal or swing picks, basically not intraday. So you initiate and then move it out a few days and you get the targeted profit. So just to wrap up, it is cautious bullishness in the short term is my view. Reasons. Weekly bullish reverse momentum divergence is already in play. You just confirm. That's why we had the bounce up. And it could work out and target for that is further to the all-time another all-time high is the target for that. Right? We've seen that. Chart showing a hammer pattern. A big hammer, big bounce shows bulls are very much there. So resistance below the daily moving average on both Nifty and Bank Nifty is the reason for the caution. So be caution. So technically you have to be cautious even when there is a bounce and the KK confidence happened. Correct. Now rupee has tried a little only cool off has happened, but institutional participation is not great as I said before. The foreign institutions are not had big sell-off that happened previous week. Now also they are selling in small quantity, which is a concern. That's the reason for the another reason for the cautiousness. And charts, the momentum has slipped and the trend also slipped on the short term. This has to catch up before I can be fully. So cautiousness. The reason, another reason for the cautiousness. No, three reasons for the cautiousness and two reasons for the bullishness. No, last paragraph is the British more or less. It's for the option sellers and option traders basically. So it all depending on the volatility. Volatility is a new range. There is between 15 and 20 or 15 and so it had slipped from the 16 previously. It had fallen down 8% previously. Now it has shot up 4%. So this is the spikes of the move that is happening, which can be benefited by counter spreads, the option strategies, as I say every day. And IV is moving in, as long as it is moving in that range, it is fine. As long as it doesn't go beyond the 20. Right. Now using of calendar spreads and vertical spreads is also good approach. Calendar for these reasons for warehouse buy benefit and vertical spreads to benefit risk defined strategies with margin benefit and to escape from the sudden profit booking or sudden reversal of the due to volatility. So to escape from that, vertical spread would be the ideal approach. And flies and other strategies are also will use option strategies, risk defense instead of going for strategies handler rather than risky money. Right. So that's a wrap up on the market action today and stock picks and my view on the market, and I hope this helps you to frame your own view and your own trade plan for the next. Happy trading and happy learning. If you're not subscribed, subscribe and share to all. Thank you so much.